Well, after a tough few seasons, football finance directors are said to be cautiously optimistic about the future. That's according to a survey by the accounting firm PKF. But the survey also found that just a fifth of clubs are expected to make a pre-tax profit in the next accounting period. Well, here now to discuss all that, Philip Long, PKF's head of corporate recovery. Hi, Philip.
Morning.
Cautiously optimistic. There are caveats, though, because there's a potential slowdown, there's the budget, the austerity measures implemented by the government. So is that about as good as we can hope for, cautious optimism?
I think it probably is amongst the football finance directors. But I think that's the problem ahead of us, is if we go into this double-dip recession, then there's going to be income streams that will be hit by the public spending, and so we'll face more problems as we go forward.
Which income streams will be hit the hardest?
I think the hardest that will be hit would be in the lower divisions, the public, general Joe public spending. And that's going to be the issue facing people with falling gates and falling spend on match days.
The tax authorities will be keeping a close eye on things, won't they? Especially post-Portsmouth.
Well, yes, indeed. Some 25% of the clubs own up to being late with the tax payments, and the Inland Revenue authorities are becoming a lot more astute to the payment dates. And they realise as well now there's no point in trying to wind up a football club unless you're in the transfer window, because that is the only time they'll have the ability to pay you back by selling a player.
Do you think we'll see further clubs maybe forced into bankruptcy this season?
Well, undoubtedly, yes. It's only 22% of the football clubs are predicting that will make a profit.
I mean, that's an incredible number, isn't it? Just 22%. You'd think it would be more. You know it's not going to be more because we hear about it all the time. But for a business, which is what football is, I mean, 22% is not very high, is it?
It's a ridiculous figure. It is a ridiculous figure. And I think we've seen the boom times in football, and I think there's now going to be a reality check going forward.
Yes, but one of the big issues which doesn't seem to be being addressed is what we pay on wages and what clubs get in revenue. And that figure, the ratio, it's still very high, isn't it?
It's increasing. It's increasing. In fact, this time in this PKF survey, we found that the 65% figure that people see as a key performance indicator, that is going to be predicted to be beaten by 38% of the clubs, which is up from 25% last year. So, you know, in reality, 38% of the clubs are not going to be matching what they consider to be one of the key performance indicators.
It's tricky, isn't it? And how do you address that? Because you're trying to attract the best talent, therefore you've got to pay the highest wages. You want to be the best league in Europe, which is how some perceive, especially the Premier League. So how do you address what you pay for players and what you get in revenue?
I think it has to be an overall matter that's addressed by the various leagues. It was tried in the lower league, the lowest league, the third division initially. But unless it is addressed, there is no future for the economy of football, because it becomes unbalanced. And we've seen that in the Aston Villa situation just now, where the guys invested some 179 million over the recent years, and yet last year Aston Villa lost £44 million. Now, that is not sustainable.
And they're quite a successful club. I mean, they came sixth the last few seasons.
Well, yes, indeed. Yes, indeed. So that the overall model is not sustainable unless some reality is brought into these wages figures.
We'll have to see if the reality is brought in. Thanks, Kevin. Thanks, Philip. Philip Long there from PKF Accountants and Business Advisors.